The market is doing quite well today, but Algorand is outperforming. The question is why? Who is buying here? Who's selling here? How much longer could this rally last? Let's have a look at the data most people aren't considering. Let's try to figure out whether or not it still makes sense to buy Algo. Interestingly enough, there are no great news. The last real meaningful event was the SEC categorizing Algorand as a commodity and not as a security. But that was 13 days ago. When we ask AI what's happening today, we really don't get anything. A surge in trading volume, a technical support, a Fibonacci line. That's not really a great explanation. So let's have a look at the technicals. Maybe we can use simulations of buying and selling or following a trend, whether or not it makes sense to get into Algo. Now, if you've been following this channel for a while, you know that I like to trade based on moving averages. When we are below a moving average, I like to bet on falling prices. When we are above, I like to bet on rising prices. But we have to optimize this strategy, because what moving average duration is actually the best. And that's where I ran this backtest over here. That's via Bitcoin Strategy Analytics. So that's the premium member platform. I've backtested all moving averages from the 2-day up to the 200-day simple moving average. And the very best one historically has been the 65-day simple moving average. Pretty much all of the moving averages outperformed just buying and holding, but the 65-day, it created on average 75% per annum, while buying and holding Algorand actually lost us money. Algorand over time, because of token inflation, unfortunately went down in price. Here's then how this looks like over time. So we buy whenever we are above, we bet on falling prices whenever we are below, then we get this portfolio line that's in blue, versus just buying and holding Algorand, that's here in gray. And when we measure our portfolio in Algo tokens, that's what we get. Especially in the last 4 to 5 years, this was a very profitable approach. And so while this trading rule worked very well in the past, of course there's no guarantee that it will work in the future. But let's have a look at where Algorand is right now relative to that moving average. So it's a 64-day simple moving average that's plotted on the chart, and the recent rally indeed did cross the SMA. We should now be bullish. We should now be betting on rising prices. There are our failed signals though over here. So sometimes we get fake outs. We buy high to sell low again, to buy high again, to sell low again. So no strategy is perfect, but that's why we run the back test. And what I like about the strategy is that pretty much any of those approaches outperformed just buying and holding. So following the trend in Algorand does make a lot of sense. It historically worked extremely well, especially in the last 4 years. There is a problem though with that strategy, and again, it's the fake outs. Let's have a look at the metrics in more detail. If you invested $100 at the beginning of the backtest, that would have turned to $4,400 with the approach. Buying and holding Algorand unfortunately decimated the capital to just $3. And here's why. This is the long-term chart. So the Sharpe ratio is much better, the Sortino ratio is much better, the maximum drawdown of course is also much lower, and even the volatility of that approach is lower, of following the trend. But here's the problem. Have a look at the win rate. The win rate is only slightly above 20%. So if we now say that we should buy Algorand because we went above that moving average, we still have an 80% chance that this is again a fake out. The winners are much larger than the losers, and that's why the strategy works. So a winning trade on average makes more than 51%, a losing trade only loses 4.4%, but still having a win rate of only 20% is psychologically very, very demanding. So this can very much just be a fake out. So is there maybe a strategy that's a bit more consistent in its gains, where we get less fake outs, but we still get a similar kind of return? I think there is. I have backtested the crossing of two moving averages. So when we get a golden cross and a death cross, and I prefer those results over just the direct price crosses. Let me show you. So a golden cross is when a shorter term moving average goes above a longer term moving average. A death cross is when the short term goes below the long term. The question is, what's the best moving average durations again? Is it the 200-day and the 50-day, or is it a different combination? And again, the backtesting tool, Bitcoin Strategy Analytics, comes to the rescue. I've backtested all kinds of combinations, and here is the best combination. What is that combination? It is the 59-day for the fast moving average and the 72-day for the slow moving average. We get a very similar return annually, 65%, but our win rate is at 57%. The average win is much larger than the average loss. This is psychologically a bit easier. So let's have a look at the 59 versus 72-day simple moving average. Here is the result. Here are the two moving averages without looking at the price, and we are bearish since the 16th of September of last year. That's when Algorand was at 23 cents, and since then it went down by 57%. And even though we have a rally now, those two moving averages have not yet crossed. We were consistently bearish since then. This is very different to the price crosses where we did get our fake outs. And the price at which we entered was very similar. And so that data makes me wonder, does it really make sense to buy into this current rally, even though Algorand is now very, very low? The issue is that the overall momentum hasn't really turned around. We haven't really consolidated at a low price. We simply just shot up very quickly. The overarching problem is, of course, also the general crypto market. There's so much correlation in crypto. And if Bitcoin goes down, if Ethereum goes down, if Solana goes down, then most altcoins will go down with it. It's either all red or all green at the same time. And you might have watched prior videos on this channel how I'm still not bullish. We have entered a bear market, but in prior bear markets we always fell below the realized price, the average cost basis in Bitcoin. And we haven't yet hit that price level. It's currently at $54,000. We might even fall below the long-term holder realized price, which is only at $44,000. Again, in prior bear markets we did fall below that price level. And so when the general market stays bearish and the current momentum in Algorand is not yet confirmed to be bullish, we only got a very first early positive sign, then I think it makes sense to still stay somewhat cautious. There seems to be no major fundamental driver of this rally. And while there is a lot of upside potential in open interest, in additional leverage that could enter the asset in case the trend turns around, I think it's better to wait for that final confirmation, to wait until the two best moving averages they cross. And we don't necessarily have to go much higher in the price. We just have to stay at the current price level for a bit longer for that switch to happen. If you want to look at the various back tests that I have run, and if you want to know my strategy, how I'm trading those assets, if you want to get notified whenever the trend changes, and you want to run your own simulations of buying and selling various assets, then feel free to check out the premium membership. The link is here down below. If you got some value out of this video, feel free to give it a like. It will help the channel grow. If it's your very first time here, feel free to also subscribe. I publish these regularly. See you next time on YouTube or see you on Premium. Cheers.